Preparing for Aladdin Operations, Portfolio Services and Fund Accounting roles at BlackRock interview? You've reached Candy Mentor, and this video is for you. We'll walk through 12 key questions you're likely to face. For each one, you'll see what the interviewer is testing, the core concepts you should cover, and a sample answer. Subscribe, like, and share, and drop a topic request in the comments. Question 1. How would you explain BlackRock's Aladdin platform to someone outside the industry? The interviewer wants to assess whether you understand Aladdin as more than software, a front-to-back investment platform linking portfolio management, risk, trading, operations, accounting data, and client reporting. While answering, focus on the platform's operating model, data centralization, risk analytics, workflow connectivity, and why accurate operational inputs matter for investment teams and external clients. Aladdin is BlackRock's end-to-end investment operating platform. I describe it as combining portfolio management, trading, risk analytics, compliance, operations, and reporting on one data foundation. For an operations or portfolio services role, the key point is that accurate positions, prices, trades, and reference data feed downstream risk and client outputs. If the data is wrong, decisions and reporting are wrong. Question 2. Walk me through the trade lifecycle and where an Aladdin Operations analyst adds value. The interviewer is testing your practical knowledge of trade lifecycle controls, from execution through confirmation, settlement, position updates, cash movement, exception management, and downstream reporting impacts. Make sure to cover trade capture, allocation, confirmation, settlement, cash and position updates, break resolution, and how errors flow into compliance, risk, accounting, and NAV. I would start with trade capture. The order is executed and booked with economics such as security, quantity, price, broker, fund, and settlement date. Then operations validates allocations, confirms with the counterparty, monitors matching, resolves exceptions, and ensures settlement. After that, positions, cash, accounting, and performance update. In Aladdin, clean trade data is critical because one booking error can affect compliance, risk, cash projections, and NAV. Question 3. A portfolio has a cash or position break versus the custodian. How would you investigate it? This question evaluates your ability to handle daily reconciliation breaks, prioritize risk, investigate root causes, communicate with custodians or administrators, and maintain clean books and records. In your answer, talk about position, cash, market value, income, and timing breaks, plus investigation steps, evidence, ownership, escalation, and prevention of recurring issues later. Reconciliation means proving that internal books agree with external records, usually the custodian, administrator, broker, or accounting system. I first separate breaks by type: position, cash, market value, income, FX, or timing. Then I identify whether the root cause is a trade, corporate action, price, fee, or settlement issue. The best answer is not just clearing the break, but documenting ownership, preventing recurrence, and communicating impact. Question 4. What is NAV, and what are the core fund accounting steps behind producing it? The interviewer wants to assess your fund accounting fundamentals and whether you can connect NAV production with pricing, accruals, reconciliations, P&L, controls, and reporting deadlines. Be sure to mention net assets, shares outstanding, income and expense accruals, realized and unrealized gains, valuation checks, tolerance review, sign-off, and timely escalation protocols. NAV is the fund's net assets divided by shares or units outstanding, but fund accounting is the process that produces it. I would calculate assets, subtract liabilities, accrue income and expenses, reflect realized and unrealized P&L, and validate pricing. For a BlackRock-style role, I would emphasize controls, price checks, cash and position reconciliations, tolerance review, sign-off evidence, and escalation before client or shareholder reporting deadlines. Question 5. Why should an operations analyst understand duration and other portfolio risk measures? The interviewer is testing your ability to bridge investment concepts and operations, especially how fixed income analytics depend on accurate security setup, pricing, cash flows, and positions. While answering, focus on duration as rate sensitivity, basic interpretation, convexity caveat, and the operational data quality required for reliable risk, performance, and client analytics. Duration measures a bond portfolio's sensitivity to interest rate movements. If duration is 5, a 1% rate rise roughly implies a 5% price decline before convexity. Operations should care because incorrect security terms, cash flows, prices, or classifications can distort duration, VAR, and portfolio risk. In Aladdin, accurate reference and position data support front office risk decisions, client analytics, and reports used daily by portfolio managers globally. Question 6. How would you process and control a corporate action in a portfolio services role? This question evaluates your understanding of corporate action processing, election deadlines, entitlement validation, position and cash impacts, and the operational risk created by missed or incorrect events. Make sure to cover mandatory versus voluntary events, effective dates, eligibility, custodian comparison, instructions, position updates, cash proceeds, downstream breaks, and communication before deadline-sensitive actions. For a mandatory corporate action, such as a stock split, I would validate the effective date, ratio, eligible holdings, and custodian treatment. Then ensure positions and cost are updated correctly. For voluntary events, I would track elections, deadlines, and instructions. The risk is downstream. Missed or incorrect corporate actions create position breaks, cash discrepancies, performance noise, and potentially wrong NAV or client reporting for investors. Question 7. A security price moves sharply and triggers a pricing exception before NAV sign-off. The interviewer wants to assess valuation control judgment, specifically how you investigate pricing exceptions without blindly accepting vendor data or making unsupported overrides that could affect NAV. In your answer, talk about source hierarchy, independent vendor checks, price movement analysis, market context, liquidity, escalation to valuation teams, documentation, and policy consistency always. I would not override the price casually. I would check the source hierarchy, compare independent vendors, review prior day movement, look at market news, liquidity, and similar securities. Then determine whether the variance is explainable. If it remains unresolved, I would escalate to valuation or pricing governance with evidence. The goal is fair valuation, consistent policy application, and timely NAV delivery without hiding genuine market moves. Question 8. A client says portfolio performance in a report looks wrong. How would you respond? This question evaluates your client's service mindset and analytical process when performance, benchmark, return, or reporting numbers appear inconsistent and stakeholders need a clear answer quickly. Be sure to mention defining scope, checking methodology, validating positions, cash flows, prices, FX, fees, corporate actions, quantifying impact, and communicating remediation professionally to clients. I would first define the issue, which portfolio, period, benchmark, currency, and return methodology. Then I would check input data, positions, cash flows, prices, FX rates, corporate actions, and fees. I would reconcile the calculation to source systems and isolate whether the difference is timing, methodology, or data quality. Finally, I would respond clearly, quantify the impact, and explain any remediation or control improvement needed. Question 9. What does a strong control environment look like in fund accounting or portfolio operations? The interviewer is testing your operational risk awareness, including how scalable controls, maker-checker processes, audit trails, exception aging, and materiality thresholds protect funds and clients. While answering, focus on risk-based prioritization, documented review, automated reconciliations, approvals for overrides, escalation protocols, evidence retention, and distinguishing harmless timing differences from material issues. A strong control environment starts with clear ownership and evidence. I would expect maker-checker review, automated reconciliations, tolerance thresholds, exception aging, audit trails, and documented approvals for overrides. In a high-volume BlackRock environment, controls must be scalable and risk-based. Low-risk timing breaks should not receive the same escalation as NAV impacting pricing, cash, or corporate action issues that could materially affect clients, regulators, or investors today. Question 10. If a data field in an Aladdin report does not match the source system, how would you troubleshoot it? This question evaluates your data investigation approach, especially whether you can trace report issues through source systems, mappings, timestamps, transformations, identifiers, and basic SQL-style validation. Make sure to cover data lineage, source feeds, joins on identifiers, record counts, filters, mapping rules, reconciliations, and proving the breakpoint before proposing fixes. I would treat it as a data lineage problem. First, identify the report field and trace it back to the source table or feed: trade, position, security master, price, or accounting ledger. Then compare timestamps, filters, mapping rules, and transformations. If I used SQL, I would join key identifiers and test record counts. The point is to avoid fixing symptoms and instead prove where the data changed. Question 11. Why BlackRock? And why an Aladdin Operations portfolio services or fund accounting role? The interviewer wants to assess motivation and fit for BlackRock, including whether you understand Aladdin's scale, operational excellence culture, collaboration model, and the pressure of supporting investment and client outcomes. In your answer, connect BlackRock's platform, risk focus, global cloud base, process improvement opportunities, and your strengths in analytics, accuracy, teamwork, and deadline management clearly. I would connect BlackRock's scale with the role's operating impact. Aladdin and portfolio services sit at the intersection of investment decisions, risk, operations, and client reporting, which is exactly where I want to build expertise. I'm drawn to roles where accuracy matters daily and where small process improvements can benefit many portfolios. My fit is analytical, detail-oriented, and collaborative under deadline pressure. Question 12. Tell me about a time you found an error close to a deadline. What would you do in this role? This question evaluates judgment under pressure, particularly how you balance deadlines with accuracy, materiality assessment, escalation, stakeholder communication, documentation, and root cause prevention in operations roles. Be sure to mention assessing impact, notifying stakeholders early, avoiding silent fixes, documenting decisions, meeting critical cutoffs where possible, and improving controls after resolution afterward. If I found a material issue near deadline, I would assess impact first: portfolio, NAV, client report, risk metric, or settlement exposure. Then I would notify the right stakeholders early, propose options, and document the decision. Speed matters, but silent fixes are dangerous. After resolution, I would perform root cause analysis and add a control, automation, or checklist step so the same issue is less likely to recur. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video.